Hi, my name is Jason Lee, and I'm the founder of a company called Celent Innovations, which automates legal agreements for small businesses. I'm also an attorney, and with Michigan SBDC's encouragement, we've created this video and the website to help entrepreneurs in Michigan form new businesses. So in the previous video, we discussed several different forms of businesses that people can form in the state of Michigan. And we learned that the most popular is the limited liability company, also called LLCs, due to various advantages that it has. So in this video, we'll do a deep dive onto those advantages, including flexibility, ease of creation and maintenance, and tax advantages that the LLCs have in the state of Michigan. So the first thing I want to say is that the Michigan Limited Liability Companies are governed by the Michigan Limited Liability Company Act. This law sets forth requirements for pretty much all important aspects of LLCs, including how it's created, how LLC makes decisions, how to split the money up, and how to dissolve the company. In many of these cases, it sets forth the default rule, which can be modified and overridden in the operating agreement. And as I mentioned in the earlier video, the way LLC Act reads is that unless it is stated otherwise in the operating agreement, this is how you resolve situation X, and so on. But there will be times when it doesn't say, unless it's stated otherwise in the operating agreement. So what does that mean? That means the law doesn't give you the flexibility. Well, I thought the LLCs were supposed to be flexible. Which are the areas where it is inflexible? One good example would be the owner's right to receive information about the company. Now, it doesn't mean that the owners have the right to receive every and all information of the company, like source codes or passwords or whatever it may be. But what the law generally frowns upon is the owner's reasonable access to information about the company that they own, especially if the information sought is financial or accounting in nature. By the way, we've been talking about operating agreements. In Michigan, the operating agreement is optional. This is not always the case in other states. In New York, you have to have it, but it is optional in Michigan. The good thing about not having an operating agreement is that it's one less document to worry about when you form it, and one less document to worry about updating as the LLC progresses forward. But to be honest, I don't know any lawyer who recommends this path of not having an operating agreement, because you would actually have to look up the law if you want to do something. So, for example, you might want to admit a new member. Is it a majority vote? Is it a unanimous vote? Do you even need to vote? What is it? The default rule in Michigan is unanimous vote. Now, this can be modified and overridden in the operating agreement. But if you even had an operating agreement, that would be the first place that you would go to look it up, because an operating agreement is sort of like the user's manual for your LLCs. But if you don't have it, you need to have the presence of mind. You need to have the presence of mind to look it up, find it, and apply it correctly in your situation, which is a lot more work. So the conventional wisdom is for an LLC to have an operating agreement, even if you are a single member LLC. And of course, it has to be drafted by a competent attorney or a company. So let's talk about some more of these default rules of LLCs. So some of them are actually counterintuitive, or it could be surprising to some people. So let's start with an easy one, which is that the LLCs by default are governed by its members. So the owners manage it. Now you can have the manager or managers manage your LLC, but you have to say so in the articles of organization, the document that you file with the state of Michigan, rather than in the operating agreement. So this is different from Delaware LLCs, and I'll mention Delaware just as a contrasting point, which allows you to make that member versus manager election in the operating agreement. And by the way, the difference between the articles of organization and the operating agreement is that the articles of organization gets filed with the state, so anybody can look it up. The operating agreement, on the other hand, is internal. So if you decide to change it, you'll still have to vote internally. But once you decide to change it, you could just keep it for your own records, and you don't have to file it with anybody. One thing that is tricky about this member versus manager managed LLCs is that in the form of articles of organization that the state of Michigan has prepared for the public to use, it does not have a check the box for member or manager managed LLCs. So what you need to do is you need to actually put in the words, either type it in or write it yourself. The business of the limited liability company is to be managed by one or more managers in order for you to be able to delegate your responsibilities to the managers. Second thing is that each member has one vote in Michigan, and they don't vote based on their ownership share. So it's very common for people to think that, oh, I own 80% of the company, Amy owns 10%, Bob owns 10%, so I'm going to have my way in pretty much in all of the meetings that we have and all the decisions that we make. But Michigan law is different from, say, Delaware law, and so Michigan is based on per capita rather than percentage of ownership. And remember, though, that this default rule can be overridden in the operating agreement. Another interesting thing is that in Michigan, the interim distribution, and so when I mean by interim distribution, I'm not talking about the final distribution upon dissolution. I'm talking about the money distributed from time to time during the operational stage of the company. So in that type of distribution, is allocated evenly amongst the members, so distributed in equal shares. Again, now it's very common for people to think like, oh, I own 80%, Amy owns 10%, Bob owns 10%, so I should get majority of the distribution, right? No. So if you decide to distribute $3,000, every single one of those members will get $1,000 each. So again, Michigan law is different from Delaware law, just as an example, but you can easily override it in the operating agreement. Are you surprised by this at all? I know I was when I first learned of it. You see that the Delaware does it one way, so which is that it bases a lot of the decisions on the ownership interest, whereas Michigan does it another way, which is that it votes based on per capita and allocates interim distributions equally among its members. And Michigan is not the only state to do this. Other states do it too. And this is one of those cases where reasonable minds can disagree. But don't forget that you can always customize these type of rules specific to your LLC in the operating agreement. Let me just add a few more thoughts on taxes regarding LLCs. I mentioned in the earlier video that LLCs by default are treated as disregarded entities or pass-through entities. And I think that's especially early on, not necessarily because they escaped double taxation, but because the losses that you incur can offset your other income. So don't get me wrong, preventing double taxation is important. But when you start out, you feel like most other businesses, you're going to have losses. And uh, but if you could use those losses to offset your other income, and even your spouse's income, if you're married, that would be powerful because it will have cash impact in the form of a bigger tax refund or lowered tax payments. So this is just an example. I don't know your situation. I'm not giving any tax advice, but something to think about. So if you are currently employed and quit your job to start a business in the middle of the year, say, June, July, or something like that, part of the wages that you've earned in your previous job could be offset by the losses that your business incurs for the remainder of the year. If you start your business in January, unless you receive a big bonus payment in January or something like that, you're going to spend the entire year mostly incurring losses. And these losses could be eventually be used to offset your income, but it won't be relevant until you become profitable, which would be 3 to 5 years down the road if you could make it that far. On the other end of the spectrum, if you start the business in December, you won't have enough time to incur losses. The year is going to close out, and it won't be that much different from starting the business in January the following year in terms of sort of tax impact. So one thing that I want to just note about this is that there are some details that you need to be aware of, like the maximum amounts and other details. So I highly advise you to talk to your tax professional or an accountant. But if I could just make one point, is that you need to make business start date typically as early as possible, because that's when a lot of the business expenses become immediately deductible, as opposed to it being categorized as a startup cost, which would have to be amortized over a 15-year period. So that rounds out the deep dive of Michigan LLCs. I know that was a ton of technical stuff. Hopefully you found this information understandable and helpful. If you like this video or learned something new, please give us a thumbs up and subscribe. And in the next video, let's get going and actually start creating the LLC in Michigan. Thank you, and see you there.